Okay, so live stream worked. We're now live. Get everybody in. Which is awesome because live stream has been a bit of a pain the last couple times, so we're good to go.
Great.
All right. People trickle in and connect to audio. Alrighty, so welcome everybody. Thank you all for coming out. So my name is Sam Thompson. I work for Joe Bladdock, who it's probably through his Facebook page that you got acquainted with this webinar happening tonight. And we are joined with the lovely Nikki, who is going to be our real estate agent. She'll cover off all of the fun stuff of this side. I'll be sort of the numbers and qualifying amounts, and then Nikki takes over the more interesting side that people seem to want to hear. So you can see in the chat box sort of what our schedule looks like for tonight. So I'll start off chatting about the mortgage process, why to get a mortgage, a lot of the factors that go into getting a mortgage. And then Nikki will take over chatting about the real estate side, why to use a buyer's agent, lots of other really great and useful information. And then we will cover off with some questions and answers. So if you're either in the Zoom with us now, or if you're watching on Facebook or YouTube, during either of our presentations, please just type a question in the chat box or in the comment section, whatever service you're using. We love questions. It makes makes that end time a little less awkward, and it draws more out of us. You're also going to see a little link in the chat box to the side here to sign up for a scratch card. So there's going to be a couple plugs to sign up for that. So if you want to get it out of the way, you can do it now. But we'd love to give you guys a scratch card as a thank you for coming into our webinar tonight. So now that we've covered those bases, I will go ahead and share my screen, and then I can get started. Alrighty. So as I said, welcome again to the First Time Home Buyers webinar. So I'll be covering the mortgage broker process, what to look for and what to expect in getting a mortgage. I'm going to cover off a lot of the mortgage mistakes that we see a lot of customers come in with. A lot of them they don't really know that they've made. We're definitely going to cover how to get some money back when you buy. That's the exciting portion of my presentation. We'll chat a bit about getting a down payment, and then I'll end off just covering what the first-time home buyer incentive is. So just a little bit about myself. So I am a mortgage agent. I work with in Joe's office with Verico Mega Mortgages. So I typically deal with a lot of the first-time home buyers that come into the office. So at the end of this webinar, you'll get sent an email with a link if you want to move forward with your mortgage process. So likely you'll be directed to me. And we'll get started looking at, your pre-qualification and all that fun stuff. Yeah, so let's jump into it. So this is a case study here that was at one of our seminars when we were able to do them in person. So this is Jennifer and Joseph. So definitely take a look at, what their scenario is. And if some of the, facts and figures look familiar, then just keep that in mind as we move forward. So they came to the seminar. They only had $1,400 in their bank. They didn't know what their credit score was, and their household income was about $65,000. So what ended up happening next is that just months later, they moved into their home. They were making biweekly mortgage payments of $499, which is quite manageable. So really what we like to use this example as is just regardless of where you are in the the home buying process, the mortgage approval process, we can take you, wherever you are, get you educated and familiar with what to expect, and then we can really, give you your best steps forward into home ownership. So where do you start from this lovely example that we gave? Getting pre-approved. It's going to be the best step forward that you guys can make, and the the number one thing to help you guys be the most prepared for entering into the real estate game or just owning your own property. So why would you get pre-approved? So first of all, it avoids disappointment, and it definitely speeds up the process. So what it actually does is we'll give you a amount that you will actually qualify for when purchasing your home. We really can't think of anything worse than, you're chatting with Nikki, you're looking at houses that are 550,000. It's so exciting. You find the one you love, only to realize that you actually only qualify for 400,000, and all of the houses you've just looked at are way out of your price range, and it's really not achievable. So we really help you get to know what to expect, and save you money that, hopefully you don't put in a firm offer. Nikki doesn't let you get that far. But we definitely want you to know what you're expecting going in and really have a focused and realistic vision of what to expect in your home. It also does present a stronger offer, and the seller takes you more seriously. So what a pre-approval certificate does is it communicates that, you've done your back work, you have been through an approval process with a mortgage lender, you've chatted about your mortgage options. And one of the best things is it actually guarantees your interest rate for 90 to 120 days. So especially when we're seeing, incredibly low rates, it's a great way to have a rate guarantee for, the length of your pre-approval. Here's a couple of lenders and mortgage providers that we typically use. So some of them you may realize and recognize, they're your home bank, it's your branch. Some of them you may not recognize, but a lot of them are actually funded by some of the big banks that are out there. So really, this is just to give you guys a vision of the access to products and different mortgage options that can be available to you. So yeah, where going into your branch, they'll only be able to give you the mortgages that say CIBC offers, whereas we can actually take your scenario and base it off of all of these different lenders, including CIBC, if there's a home bank that you're wanting to stick with. So how do you get pre-approved? So typically it starts with a text. I think the most frequent, way we start the pre-approval process is just by signing up for a phone appointment with myself after this webinar. It can be done completely over the phone. Typically don't do them in person anymore, via text. A lot of it happens over email or not really Skype. Zoom sort of has taken over, so we should probably change that slide. But we do a lot of video calls, whatever is most comfortable for you. Some people really do enjoy having a face-to-face with myself or Joe. Otherwise, we can do it completely over the phone or on email. And all you're going to need to have with you is your pay stub as well as your photo ID. And then as we continue the process, it's really easy for you guys to just send us the documents over email, or you could even fax them to the office. But again, most of the process is done over the phone and email. Why do Canadians use brokers? So this is a really funny image, but it really drives the point home that me and Joe really feel fits the scenario most. So Joe is a very tall guy, well over 6 feet. I'm over 6 feet, a little shorter than Joe, but a big thing that we find truly difficult is finding a shirt that's actually going to fit. So sometimes you'll find it fits on the shoulders, but then you're swimming in it and it goes down to your knees. Sometimes you find it fits around and then it's a crop top like the poor guy on the right. So we really want you to find a mortgage that's going to fit you. You're not going to have to compromise in any areas, and we can really help you achieve that by chatting through your scenario, by referring your mortgage scenario with all the lenders that we work with. So we give you access to more products. We protect your credit score. So only one credit check is actually needed, and it's valid across all of the banks and lenders that we work with. So rather than getting, all of these individual checks done at, 5 different branches, if you chat with us, we will just do one hard credit check, and that's valid across every mortgage lender and bank that we work with. Buyers have a unique story. So what we actually get to do as well is when we submit your file for, pre-approval or for full approval, we actually get to add lender notes to the underwriter on the other side of the scenario who is accepting your application. So just a quick testimonial for this. It was back early in the year, probably about February. We had a client come into the office. He had some poor credit from, a couple years back, maybe a year and a half. So where some banks would just, decline it because of that, we were able to communicate that at that time he was only a seasonal, temporary employee, but since then he had acquired full-time permanent staff. So we were able to communicate that in the lender notes, and we found that actually the next day he was fully pre-approved. A big benefit as well is that using a broker is completely free. We get paid by the bank or lender. You don't pay us anything during the whole process. So in essence, you could say that we actually work for you because it's in our best interest for you to get your mortgage. Another reason we use to use a broker and to find mortgages that fit is just the amount of mortgages that are available to you. And again, it can be run against what your specific scenario is. If you're looking for a new build, if you're looking for short-term or portable mortgages, cashback mortgages are really taking off. Whatever you're looking for in a mortgage, we can help you achieve that goal. There was also a study that was done, I think a couple years ago, that said on an average, Canadian mortgage brokers saved their clients about $42 per month versus the typical institutional lender. So we've done the math and crunched it out, and it works out to one small Timmy's coffee every weekday of the month. So I love Tim Hortons coffee. I don't know if anyone else does, but if you love coffee, me and Joe like to say that if you get a mortgage with us, we will buy you a small Timmy's coffee every weekday of the month. So now that we've established, the difference between using a bank versus a broker, we're just going to cover off some of the mistakes that we see clients come into the office with. Again, a lot of them, they really don't even know that they've made. So ignoring your credit score. So it's never going to be a bad time to, check into your credit score, to give yourself a little, check what your financial status is going to be. So we don't want you stuck with a bad rate because you have poor credit and haven't done anything to change it. So you can fix your credit score even, you can fix your credit even with a bankruptcy on record. Chat with us about that if that's your scenario, and we can look at ways to maybe speed that process or some tips and tricks moving forward. It's really easy to check what your credit score is. There's sites like Equifax that you pay for, but there are also some free options as well, such as a lot of mobile banking apps have a feature that you can check your credit score, or sites like Credit Karma do help a lot. So again, just getting an idea of where you're at really helps you decide what your best step moving forward is going to be. Also, so if you have gone through a consumer proposal or a bankruptcy, we really want to stress that you follow the 2-2-2 rule. So what this is typically a bank is not going to lend you a mortgage until you have at least 2 credit cards. You have to have them for at least 2 years with a $2,000 limit. So if you're discharged and you haven't done it, it'll be your first step to really start establishing, the start of you rebuilding your credit. So what goes into a credit score? So here is just a quick breakdown of what we consider, a good to amazing to poor credit score. So if you have anything above 680, they have sort of changed the, sort of lower end that you can actually qualify for today's rates. And it's actually 680. So if you're anywhere 680 and above, you're doing completely fine. You have nothing to worry about. Anything in the 500s to 300 range, your credit is going to need a little bit of help. So again, if that is your scenario, reach out to us. We can chat about ways to start building credit, as well as we can, look at some B lenders if that is an option that you're interested in pursuing, if you're really wanting to get into the market now. A quick breakdown of how they calculate their score, just to give you a bit of further understanding. The biggest factor in your credit score calculation is going to be credit history. So what that means is just the length that you've had those credit accounts. So especially if you have an old credit card from high school or from college, it's really good to keep those credit accounts, because the second you close it to open a new one, you lose all of the credit history that was associated with that one account. We'll also see the second biggest one is going to be debt owed. So typically we want to suggest you to stay below 60% of your maximum credit limit. So breaking that down in an example that is easier to understand is looking at a difference of a $900 balance on a $1,000 credit card versus a $10,000 credit card. So having a balance of $900 on a $1,000 credit card is going to translate much worse on your credit score, because it's communicating to the calculation that you're using 90% of your available credit. So keeping your ratios in check and only using 60%, trying to keep it below that is going to help with your credit score. So if the bank offers you a credit limit increase and you could trust yourself with that extra room, definitely take it and thank them for making it easier for you to build your credit score. So not reviewing your options. So I chatted a little bit about a lot of the different lenders, but there is so many different moving pieces in getting your mortgage. It's really not as simple as you read one article on ratehub.ca and that's the end of it. You're sticking to it. There are so many moving pieces, and each one is going to be really specific to whatever your scenario is. So just looking at rates for an instance, again, you can tell that this presentation hasn't been updated since COVID, because we are not seeing rates anywhere near 2.99. But is there a difference? So on paper, it's only 0.15. What does that really translate to? So yes, there's a huge difference. That saves you about $1 per day, $42 over a month, or almost $10,000 over the life of your mortgage, just by getting a 0.15% less on your interest rate. Different banks. So again, you saw the slides with the lenders and banks that we work with. So there are more than 1,000 different mortgage options that are available. So again, using us versus the bank is so beneficial, because we can run your scenario by the mortgage that's going to fit you best. And what you'll actually find is a lot of different banks different banks and lenders offer promotions that we have knowledge of and that we can help direct you towards. If you're looking for a cashback option, we know lenders that are offering 3% cashback that can be used to help cover closing costs. If you're not interested in that and you want a portable mortgage, if you're looking for a new build, whatever it is, we can really take your scenario and point you in the right direction and get you connected with the best mortgage for that situation. Payment options. So monthly versus biweekly. Is there a big difference? There actually is quite a difference in the payment frequency of how often you're paying your mortgage. So we can see in the chart here that the blue lines or blue bars are going to be a traditional monthly payments, and the yellow bars are going to be your loan balance by using biweekly payments. So you can see you pay quite a bit less in insurance, and you can actually speed up the process and finish your mortgage faster just by increasing the frequency. You're actually making 26 payments a year as opposed to the original 12 if you do a traditional monthly payment basis. Penalty calculations is a huge one. So we've seen a lot of horror stories of people who have got stuck paying these outrageous fees. So sometimes life is going to happen, and sometimes the only option for you is going to be to break your mortgage. So we really don't want you to get stuck breaking your mortgage and then having to pay upwards of $20,000 in a penalty calculation. So we actually take that into account, and that's something that actually a lot of people don't really think of when they're moving into the mortgage process, is that should you have to break your mortgage, you're going to spend an arm and a leg on those penalty fees. So we actually take that into account and find some mortgage penalties that are a bit more affordable in the event that that is your only option by breaking your mortgage. Mistake number 3 is borrowing too much. Simple enough. Don't borrow too much. We don't want you to end up house poor, extending your limit so much that you're sitting on the floor of your new home eating pizza. You have no box spring for your bed. We want you to be able to live in the new home that you purchase, whether that's extending your Netflix subscription or ordering from Skip the Dishes, whatever is getting you guys through COVID. We want you guys to keep living in the new home that you purchase. And on the topic of borrowing before you buy, if you are planning on getting a car loan, we really recommend you get your mortgage first. And that includes right up to closing, because having monthly mortgage payments, monthly car loan payments of even as low as $300 can actually drastically affect what your maximum approval amount is. So we do deal with lots of clients that have car loans. So if that's your scenario, don't panic, don't freak out. We will, work with you and still get you approved for the maximum that you can. Oops. Mistake number 4 is just forgetting about closing costs. So we do have a better breakdown that we used to give away in a closing cost worksheet. It was a nice laminated booklet that you guys got to take home with you. But as this is online, you will get an email with a link covering the closing costs. So I won't spend too much time on it, but typically you'll want to have about 1.5% of your house price saved and ready to cover the closing costs. And mistake number 5, the last one we'll touch on, is just not getting pre-approved. It's simple enough. I've said it before. I'll probably say it again by the end of the presentation. But it's really quick process. Takes 5 to 30 minute phone conversation with me. Turnaround is 2, maybe 3 days. You only need your ID, pay stubs. It's fully free, and it really gives you a focused look at where you're at in your home ownership journey, and it gives you areas to work on, or gives us a heads up on areas that we need to take into account when we're working with your file. So don't forget to set up your home buying team. So once you've been fully pre-approved, you're ready to go. Working with a real estate buyer's agent is going to be one of your best friends through the process. Again, you don't pay the real estate buyer's agent anything directly. So, working with people that are going to have your best interests at heart is going to be the smartest decision that you can make going into a market or an avenue that you maybe haven't done before. So we're going to cover over another case study here. So this was down in Tavistock, Ontario. These clients bought the home for about $329,000. Their down payment was $16,450, and they're making biweekly mortgage payments of $696. So after 5 years, the market value of the home had actually increased to $419,000. They had refinanced, so they do have $339,000 of mortgage left, but they could sell that home then and take $140,000 of equity to their next home in just 5 years. So I'm not going to talk too much about what a great investment real estate is, because I'm sure Nikki will touch on that. But really, there's no other investment you can make that will give you that amount of turnaround, and you get to live in your investment. It's like having, another household income living with you that is also providing you a home. So now we're going to get into the fun section. This is how you guys get some money back, get some grants, rebates, all available just because you are a first-time home buyer. So the first one we're going to go through is, if you purchase an energy-efficient home as a first-time home buyer, you are entitled to a refund of approximately $1,000. So first-time home buyers are entitled to receive a refund. You'll get about 10% of your CMHC insurance premium if you purchase an energy-efficient home. So just to break that down a little for you, on a $425,000 home, that refund works out to be about $1,100. As a first-time home buyer, there is a refund on your Ontario and Toronto land transfer tax in the form of a rebate. So if you're purchasing in Ontario, the refund will be of approximately $4,000. If you're looking at buying in Toronto, I'm not sure if anybody is, but if you are, they will toss in an additional $3,700 to cover the Toronto land transfer tax. So that total rebate is up to $7,725 if you apply for the Ontario as well as the Toronto. New to Canada benefits. So this is a really cool initiative that's available to newcomers to Canada. So to qualify for this, you just have to be a permanent resident of Canada within the last 5 years. And what they've actually done to sort of soften the the initial qualifications is they've reduced the employment requirement to just 3 months. So typically we'll need, at least 2 years of employment history. This is dropped to 3 months, as well as there's no credit score that's required. They will just look at, bank statements, some of the phone bills you've been making, as well as insurance statements to get an idea of where your credit is at. HST rebate. So if you are looking to purchase a new home from a builder, there is an HST rebate that's available to you as a first-time home buyer. So say your new home you're building was $425,000. The rebate works out to be about $33,000 on that HST tax. There is also a tax credit available to you. So this one is a super easy one. You will fill it out on your following year's tax form. I forget the actual line number, but you just write 5,000 as the tax credit, and it is available to you if you are a first-time home buyer. Again, you will, file for that on your next year's tax return. So on a family with a household income of $85,000, that can work out to be about $2,100 back into your pocket. Free 1-year home warranty. So again, if you're a first-time home buyer, we do have some lenders that will offer 1 year of free home, 1 year free of home warranty that covers home heating, air conditioning, electrical, water heating, and plumbing. So all of the basics. If we look at Murphy's Law, something's going to happen. Of course, it'll be within your first year of home ownership ever. So this is a really cool incentive to take advantage of to protect yourself. So up to $10,000 in repairs are covered, and there's no inspection that's required. So when we're chatting after this webinar on a phone follow-up, just let me know if that's something you're interested in, and we can point you to the lenders that offer that. Withdrawing from your RRSP completely tax-free. So this is really important if you're finding it difficult to reach that down payment amount. So through the home buyer's plan, each homeowner can, home buyer can withdraw up to $35,000 or about $70,000 per couple, completely tax-free from your RRSP. So this will be taken out in basically a loan against your RRSP, which you will just pay back over the life of your mortgage. So it can save you an additional $21,000 in tax from withdrawing from your RRSP. So to qualify for this one, it's really easy. You just need to be a first-time home buyer or someone with a disability. If you're also buying a home for a person with a disability, or just haven't owned any properties for the last 4 full calendar years, you can qualify to use the home buyer's plan. So how to get a down payment even if you don't already have one. So it tends to be a really tough and difficult spot to be when you just don't have the finances to cover the minimum 5% down. So what's available in all of these municipalities listed, if you're looking in Ingersoll or Waterloo, any of these areas, there's actually municipally funded down payment assistance plans. They'll have, their unique name, but they're all municipally funded. And what they will do is offer you, it's either 5 to 10% down payment added to your minimum 5% down. And it is a fully forgivable loan as long as you live in the property for 20 years. So each of the different municipalities have their own requirements, such as, you have to be renting in Waterloo for 2 years to qualify. There are also going to be, some household income maximums as well as some purchase price maximums. Again, reach out to us if this is something that you're interested in, and we can get you the information sheet to the specific municipality that you're looking for. But it's a great way to take advantage of that forgivable loan in case you're looking for your forever home that you're planning on living there for 20 plus years anyways. Why not get down payment assistance that just becomes yours? Other ways of getting a down payment can be through accessing a line of credit. There are some rent-to-own programs that are available should you choose that route. Gifted equity from the seller, money from family, cashback mortgages can help on the closing costs if it frees up some more room for you to spend more on your down payment. So there's lots of ways to get around it. If you reach out to us, we can give you some strategies to help boost that down payment amount. Big breath. Okay, so I've chatted about a lot of numbers. There's been lots of flashy slides coming at you, and we really don't expect you to remember or know every single number that we've chatted about. But the important thing is that in total savings, assuming that you could stack all of these on top of each other, it'd be about $52,000. And the crazy thing is that a lot of first-time home buyers don't even know that half of these rebates or incentives exist. So the benefit of working with somebody who is a professional in the field, we can really help you navigate these are ones that you qualify for. We would recommend using this grant or this incentive to help you get this money back into your pocket. So I will close off just covering about the first-time home buyers incentive as my final step. I'm just checking my time here. So get ready for the first-time buyers incentive. So how does it work? So very similar to the municipally funded down payment assistance program. It enables first-time home buyers to reduce your monthly mortgage payments without increasing your down payment. So the incentive doesn't bear interest. It doesn't require ongoing payments for the life of your mortgage. And through this incentive, the government of Canada will give you an additional 5% down towards your home if it's a resale. If you're purchasing a new construction, you can choose either a 5 or a 10% boost on your down payment. So just to get an idea of what that looks like practically side to side, we have two columns here, one using the first-time home buyer incentive and one without. So we can see that the buyer's income is the same, the home that they're purchasing is the exact same, and they both have the minimum 5% down. So here is where it changes that on the right column, there's an additional 5% through the first-time home buyer incentive. So what that does is it lowers the insured mortgage, which lowers the mortgage insurance premium, and the mortgage monthly mortgage payment is lowered by about $123. So the difference in yearly costs just by having that free accessible program is about $1,500. So that could be towards your hot tub fund. It could be used to pay off student loans, whatever it is. You know, if you're just planning on saving it for when flights become available, whatever it is, that money's completely yours. So looking at eligible properties that, you know, that this incentive can be used with, it's quite a big list. So new construction home, resale homes, duplex, triplex, fourplex. The way I like to say it is that if Nikki can find you the house, more than likely it is qualified for the first-time home buyers incentive. So just looking at the qualifications for it. So you do have to be a Canadian citizen, a permanent resident. Non-permanent residents do qualify as long as they're authorized to work in Canada. The maximum qualifying income is capped at $120,000. And they also have maxed the loan amount to 4 times whatever your household income is. So say your household income was $100,000, your maximum loan amount would be $400,000 or 4 times 100,000. So again, at least one of the home buyers must be a first-time home buyer in order to qualify for this incentive. So as I am winding down to pass it off to Nikki, I will plug one more time if you would like a chance to win your down payment. So as a thank you, there is a sign-up link in the chat box for you to be sent a scratch ticket with prizes up to $10,000. I think nothing more would bring us more happiness than for you to come to our webinar, learn more about your home ownership program, possibilities, become more educated, and then end up leaving with an extra $10,000 towards your down payment. So click the link. It's really quick to fill out. And thank you guys so much. Remember to get pre-approved. You can call or text either of the numbers on the screen. Visit us at mortgageweb.ca/barrymortgagebroker or facebook.ca/bmortgage to arrange a call back. Again, I did say a lot of information. So please, if you have questions, you can add them in the chat box now. And then when Nikki finishes her presentation, we can close off with some question and answers. So that is it for me. It is over to you, Nikki.
Awesome. Okay, so I'm going to share my screen. Oh, you're going to have to allow me to share.
That's
Sam.
right.
Okay, so take a stretch. Fill out that form that we're going to win your down payment with. And Sam's going to let me share my screen.
You should be good to go.
Let's try this now. Awesome. You're going to see my Zoom. There we go. Okay, so I'm Nikki Kelford. I'm a real estate broker here in London, Ontario, and I've been in the business for quite a few years now. I started out flipping properties. When I'm not working, you'll find me on the ski hill with my 13-year-old daughter. So life's busy, but we love to ski in the winter, and I can't wait for the ski hill to open this year. Okay, so last year I was one of the top faculty trainers for our office, and I was #1 for closed volume as well as #2 for closed units. And most of those units that I sold were to first-time home buyers just like you that Joe and Sam and I have worked together with to get mortgages for. So I'm going to start out with a whole bunch of questions. You guys are welcome to put the answers in the chat, try and kind of tease you a little bit here and kind of walk through why the big push is to actually buy your first home. So we're going to go with this. What's the percentage of global population are millionaires? We either have 1.1%, 3.7, or 5.2. If anyone's got any questions, you're welcome to unmute and say them or put them in the chat. I got nothing. No answers. Okay. 1.1, 3.7. Okay. What are we doing here? Now my screen's frozen. Perfect. There we go. Percentage of the global population that are millionaires is 1.1%. So very few people are actually millionaires in the world. Some of us like to spend like we are, but very few of us actually are. Okay, so what percentage of the world's millionaires invest in real estate? Is it 78.3, 82.2, or 90%? Oh, look at you guys catching on, 90%. There we go. There we go, 90%. That's absolutely correct. So if we take a look, these are all Canadian families that started out making millions in real estate. So some of them bought gas stations and worked their ways up. Some of them started with, or probably didn't start with hotels. They probably started with a single family home, worked up to duplex, worked up triplex, sixplex, and then eventually got to hotels and that sort of thing. Same with real estate investment and development down here with these guys here. But you can see they all made quite a bit of money with investing in real estate. So what's the average interest on a high interest savings account? And I really want to see your numbers on this one. It always amazes me. 2%, 2%. Anyone there have more? No, we got 2%. Okay, so you're right. Most high interest savings accounts will give you 2%. So if you put $100,000 in that account, a year later, you're going to get $2,000 out of it. Not a huge amount of interest when they're calling it a high interest savings account. Okay, so how much is the average house in London appreciated in the last 12 months? Is it 13%, 26%, or 19%? 26%, 19%. Owen's got 19 as well. Okay. It's actually 19.6%, and we'll see the numbers a little bit later, but you're right. So if you invested that same $100,000 into a house, a year later, you're going to have $19,000. So 119 versus 102. You kind of get where we're going with this, with the millionaires investing in real estate. It's how we make more money. It's hard to save $19,000 in a year. And what happens if that was a $300,000 or a $400,000 house that's gone up $19,000 for each $100,000? So you're now looking at close to $80,000 on a $400,000 house in just a year. Those are huge numbers, and it takes a long time working and living and paying rent and everything else to save up that $80,000 over a year. It's pretty hard to do. Okay, so we take a look at the numbers, and we can see in April, the average sale price right here was $423,000. In May, it went up to 445,000. And this was even through COVID, right? So this was in main lockdown and things just barely started to come open again in May. When we look at June and then July, we've got 473,000 and then 484,000. So the price of houses is going up close to $15,000 on average every month. This month in August, because we're so close in the beginning of September, we haven't got the actual statistics in yet, but what we have heard is it's already around like 496 is kind of what we've heard. So you can see month by month, the average is going up. We can't necessarily predict the future to see where it's going to go, but if that's any indicator, the sooner we buy in, the sooner our property is making us money. And if you had an average house, you're making almost $15,000 a month for just living in it. All right, so when we look at your wealth, horizontal versus vertical income. So if you looked at your career, every year you're probably going to make, maybe you've got 60,000, maybe 100,000. Usually on average, we got about 100,000 per household. Your company bonus, if you saved and scrimped over the years, you might, bump you up to a little bit higher than that. If you saved RSPs every year and let them grow in interest and didn't touch them, you probably over a lifetime may get up to, I don't know, maybe 500,000. Same with mutual funds, stocks and bonds. Again, if you're really savvy with stocks and bonds, it's going to be a great opportunity for you to make money. But I'm going to tell you, I don't know anything about stocks and bonds. They're very confusing when I've looked at them, and it seemed like a lot of work. So the next one on the list is real estate investments. So we all live in a house or we're renting in a house. We need shelter. We need a place for our kids and our family to feel safe. And it's somewhere that we're always going to be living in, especially here in Canada with very cold winters. So there's no living outside in the park through the winter. So having something that is going to appreciate in value, like we've seen with the average prices going up, and having a place to live that's safe and secure is also going to help save this money in the long run for your real estate or for retirement. So real estate cannot be lost or stolen, nor can it be carried away. Purchased with some common sense, paid for in full, and managed with reasonable care, it's about the safest investment in the world. And I would have to agree. Even through all of the things that we've looked at, real estate is always growing in price and appreciating over time. Okay, so just want to remind you that you can click the link in the chat to also win your down payment, because we would like nothing more than for you to be able to buy a house even faster. Okay, so first-time homebuyers between the ages of 18 and 35 are expected to spend an average of $350,000, which we're seeing holding pretty true right now. That buys you a fairly decent townhouse condo in London right now. So that was according to the BMO Millennial Homebuyer Report, Canada-wide. Almost 1/3 of those surveyed by BMO didn't think they would ever afford a home, yet 43% expressed they were intended to purchase a home in the next 2 years. So that was an increase of only 34% over 2015. So when we take a look at renting versus owning, there's a few reasons why we want to look at owning. So one, when you rent, you're going to build your landlord's wealth. You're actually paying down their mortgage, right? Your monthly payment is likely to increase. So this year it's going to be held steady, but every other year it's gone up by 1.8%, 2.2%, whatever the government decides every year to be able to put your rent up. So most likely, except for the COVID year, rent goes up consistently. You may be limited in what you can customize in your home. So if you don't want apartment beige, painting it or changing out the kitchen or, updating a new toilet or anything else is a little bit difficult. You're kind of at your landlord's mercy. If they choose to do it, that's great, but it's not really up to you. If you're planning on living in a home for more than, or in one spot for more than 2 years, buying is really a great idea. So when you're locked into monthly payments, those payments don't change for 5 years, the term of your mortgage. Now, if it's a variable, it may go down a little bit, but when you lock it in, you can pretty much guarantee that your payments are all the same. The next one, you're going to build your own wealth. So one, you're paying down your mortgage and the property's appreciating. So you're actually growing silently. Your house is worth more over that next 2 to 3 years that you're in it. You also have the freedom to customize everything as you like. So you can see behind me, my kitchen wall here is hot pink. Most landlords aren't going to let you paint the room hot pink, but I can because it's my house. So how do you get there? Steps to buying your first home. So you're going to start here with real estate education. There's books, there's first-time homebuyer seminars, which you're at right now, which is an awesome first step. Then we're going to look at blogs, podcasts, and we can even set you up with some of our past clients that have done it. Talk to them about, how the process went for them or how they made certain things work. And they're always happy to share their story as well. So why contact a mortgage broker? I think Sam covered most of these things in here. And whether you're looking at coming through anything, changes in life, different things like that, divorce strategies, anything single or working with a cosigner, Sam can work through anything that comes up and help get you approved. So step 3, find an informed real estate agent. I'm hoping that we've made that super easy. I'm right here and can be contacted at any point. All right, so we're going to find why finding a real estate agent and why would you work with one specifically, opposed to just calling the listing agent that has a house you drive by, you see the sign. Why wouldn't you call that agent? For one, that agent works for the seller. Their job is to get the highest amount of money for the seller with the best terms, not necessarily working on your behalf, getting you the house you want, the area you want, for the amount of money you want to pay for it. They're stuck with that one house trying to make sure that you buy it. So when you work with a buyer agent, you're going to we'll sit down, we'll go through all your goals. We're going to talk about the long-term goals, the short-term goals, and make sure that we're working inside that. We're going to figure out your preferred area. We're going to walk through whether it's a resale property or a private sale or anything like that, working directly with that builder. We're going to work on your behalf and negotiate for you. One of our jobs is to look at the trends that are going on in the real estate market daily. So we have office calls, office meetings. We're watching the market. We're commenting on what's happening. We're part of a big forum of all the agents here in London and looking at, how many offers are going in? What is the price happening? What trends are we seeing? So that we can be your trusted negotiator and have all that information for you. So the next step is we actually start to find a property. Once we know you're pre-approved and we go through that process. So here we are, once you're pre-approved, we'll meet, we'll go over a bunch of the different forms that are required. Then we look at determining your purchase power. We analyze your needs and wants, and then we start touring properties together. Once we find your dream house, we decide what elements go into the offer. We prepare the offer, and then I negotiate your offer on your behalf. Hopefully, we get an accepted offer. In this market, and sometimes with first-time home buyers, it's a bit of a learning process. Sometimes we start over with looking at more properties if we don't get an accepted offer. but I'm a huge believer that the right house comes at the right time for the right price. So we kind of work through this and eventually we get you the right property. When we get that accepted offer, we look at removing contingencies. So whether that's a home inspection or a financing clause or whatever it may be, we take a look at that and make sure that we're comfortable moving forward. Once we do that, we turn it into a firm deal and it's an exciting day. At that point, we can start looking at arranging your insurance for the house, making moving arrangements, and meeting with the lawyer to sign all the pertinent documents. When completion day comes, you actually become the first-time home buyer. And that's the whole reason we do these seminars. That's the most exciting day for Sam and I. You guys get your keys, we get the awesome picture, you're so excited, and a dream has come true. So I was there once. This is my first house. So I bought it for $61,000. Okay, it was quite a few years ago. It's probably not that price anymore. I did sell it a year later for $74,000. I had $2,000 in material and a lot of sweat equity, but I did end up making a profit of $11,000. The carpet fell apart in my hands. There were crack pipes in the kitchen cabinets. It was not a nice house to start out with, but a little bit of sweat equity, I made it through. I then turned around and did it to 22 houses since. Not all of them I've resold, not all of them needed as much work as this one did. And not everyone wants to do that plan, but I'm here to say that it can be done. We can start out with something that isn't maybe our dream house and work our way up. So these guys are happy first-time home buyers. They too were in this same seminar a couple years ago. So the guys on the left, they bought the house for $191,000. Their monthly payments were $1,005 with 5% down. The clients were renting for $1,275 a month. So every month they were paying less in mortgage than they were in rent, and they owned it. They've since sold that property, and exactly a year later, they sold it for $285,000. They made $100,000 in equity and paid less every month to live there. It's kind of a cool story because they've now gone and bought another house and they have a rental on top of that. So it's a way to show that you can increase that down payment without having to have a way better job or move across the country to a totally different province for a price point. You can do that right here. So the guys on the right, they bought the house for $243,000. It was a semi. They still live there and it's great. The monthly payments were $1,075 with 5% down, and they were renting for $1,360 a month. So you can see there's a fairly substantial monthly savings just by moving into something that they owned. So these guys also moved into condos. So their monthly payments were $948, and they were renting for $1,025. So that $948 a month actually included their condo fees as well. So they're saving money. They don't have to worry about the outside of the house, and they moved into a great little condo. The guys on the right, they're one of my favorite stories because they actually were living in a 2-bedroom, small apartment, like a high-rise apartment. And they had family that would come and visit them from the States all the time, and they had nowhere for them to go. They also had 2 small children, and it was very, very cramped in that not so nice apartment. They were renting for $1,200 a month. We got them into this condo. It has a garage, 3 bedrooms, a finished basement, and it backed onto green space. Their lifestyle, not only are they paying a little bit less monthly, but their lifestyle increased tenfold. Their family could come, they had a place for them to all stay, and they're gaining equity as they live there. So there's 3 ways people are saving. Their monthly payments are lower than their rent, even if it's equal, so you're still saving a little bit of money. Monthly payments are paying down the mortgage, so they owe less every month. And then the property is gaining an equity. So it actually, you're saving money 3 different ways. Okay, so active in today's market, this one is actually on the market. It's a really cute condo in South London. It's listed for $299. When I calculate what I think it will sell for, I'm going to say approximately $330,000. That would make the monthly payments at about $1,249 with 5% down. So if you're renting for $1,300 or $1,400 a month, this makes it a really great option. It may not be that, white picket fence house on, a great lot in the perfect area of the city for you, but this is a really good way to start because it's going to keep your monthly payments fairly similar, and you're going to gain that equity and pay down a mortgage. So active in today's market, we have 35 condos and 7 houses listed under 300,000. So those numbers are way down. As the prices go up, this price point is getting fewer and fewer properties available. When we look at between 301 and 350, there are 7 condos and 16 houses. So there's a few more houses in that price point. But again, those numbers are getting less and less every month. So not to put any urgency on it, but the sooner we get into the market and into these price points, the better off we're going to be because those prices are going to get pushed up. All right, so many of us are now living to 100. Of those people, if those people retire at 65, they're facing a 35-year retirement. Just to live on the I'm losing the ability to talk, hang on. Just to live on the poverty line, you need $645,000. Canadians on average said they believe they need at least $908 for a decent retirement. That perceived need tops 1 million in Alberta and British Columbia. At the same time, 3 out of 10 people aren't confident they can do that. Without real estate, I'm going to raise my hand and say I'm not confident that I could do that just on a regular income. It's a sobering fact. All right, so here's another chance to win your down payment. Go to the link, click on it. We will send you a scratch ticket or a lottery ticket so that you can win your down payment. All right, so you're welcome to follow me on Facebook at Nikki Kelford, Instagram, or Twitter. I'm always available. It's very easy to get a hold of me. You can email me or Sam. You can also call me or text me anytime you have any questions, or if you want to go over parts of the seminar again, we're good for that. And then we're going to open it up to questions. So Sam and I are here. We'll answer any questions that you have. And if we don't, we'll keep going as long as there's questions going on. And if you think of anything tomorrow or the next day, we're happy for you to email us, text us, anything like that. All right. Look at all those questions come in.
No.
Did we have any on Facebook?
Let me take a look here. None at the moment.
You guys are so quiet. You got all the right answers in my quiz.
That's right. I like your quiz. It's good, interactive.
All right. So Sam, do you want to go over a couple of the common questions we usually get, and then that may help, and then we can kind of let them go.
Sure. Yeah. So I guess I'll just cover a common thing that I do see. We see a lot in the office is lots of people that, sometimes they at least have the minimum down payment. They have, an income. It's not necessarily a high level, household income. And a lot of people actually do need to go the route of having a temporary cosigner. So just to chat a bit about the way that we can work this out, because a lot of the times when you hear cosigner, it makes your relatives kind of sweat and like they don't want to get involved at all. But we can actually add, and we do quite often, add people as a temporary cosigner for 1 to 3 years, and we can actually have your real estate lawyer split the mortgage, them the cosigner on 1% and yourself on 99%. So this also helps protect the amount that you get from all of the first time home buyer incentives, all the rebates. You'll get 99% of it. They will only be on 1% of the title. So that is a really common thing that we see. So if you find you're in a scenario where you're getting an income and you have some saved, but you do want to boost it a bit, that's always an option, and it's not anything to be discouraged about or anything like that. It's really common, and it's a pretty easy process, assuming that that they're an eligible cosigner. But that's one that I've been seeing pretty frequently with a lot of the follow-ups that I've had, is people just needing to go the route of cosigning.
So Sam, we've got Lindsay has a question here. So how does having a signed lease agreement impact the amount that you'll be approved for on a mortgage? So I think she means if you had like a roommate with a lease or a separate unit with a lease, how does that affect your mortgage?
Yeah, for example, if I were to buy a house on my own but have a signed lease agreement for my partner in hand, that increased the amount I could be approved for. So in the unit that you're looking to purchase, it has a...
I think that would be classed as like a roommate lease, right? Like it's not a separate unit, if I'm getting that right, Lindsay?
Yeah, that's right. Because essentially, instead of buying with your partner, then essentially you're still living together, but having them sign a lease agreement, like indicating how much they would be contributing each month.
Yeah. So what we do for, if it has a separate unit or there is somebody with a signed lease agreement, we can use some of that income to help, help you qualify, towards your income. Typically, it's in like a 50% extra unit in the building. It does have to be, you have to have that amount that they're going to be paying in rent. Especially if it does have like a separate unit that you would have them sort of renting from that. If it's not been currently rented, then it does have to be appraised for, the purpose of renting, and then they will give you that amount. So we add that onto your file, and it will gain, I think it is 50% back from that monthly income that you'll be receiving from them. So it will help you. It will help you qualify for more, because it does sort of have that additional amount of money coming in as, classified as your income, or to help balance it out, help them.
So Lindsay, I think every house is going to be a little bit different too, because sometimes a roommate situation doesn't qualify, sometimes it does. And sometimes if there's a separate unit, that will for sure help, and they'll use that 50%. But when we look specifically kind of at a house, or you have a kind of an idea, we can run that scenario, and Sam and Joe can take a look at that and make sure that it qualifies, and how that helps your mortgage, and make sure you qualify for as much as you can. Does that help?
Thank you.
Okay. So then the next one from Owen: if one spouse has purchased a home before but the other hasn't, can you still qualify for the first time home buyer incentives?
So that's actually a really good question. So again, it does depend on, what the incentive is that you're, looking to qualify for. I know that some of the sort of rebates, it is kind of cut similar to having a cosigner, where if it's a 50-50 title, you'll get 50% of the rebate or 50% of the incentive. So if it's something like the first time home buyers incentive or the home buyer plan, only one of you needs to be a first-time home buyer to qualify for those. But a lot of the ones that are sort of rebates or sort of cash back that you get from it, it will be split depending on what the title is. So if it's 50-50, sometimes you'll only get half of the rebate.
So Lindsay has, so do first-time home buyers typically get approved for a loan that is the mortgage amount plus cost of improvement. So that's your purchase plus mortgage.
They typically get approved for a loan that is the mortgage amount plus cost of improvements. I'm not sure what it means. What is?
That's your purchase plus improvement. So if the house, let's say you need a new kitchen, and usually one of the examples we have is a house that needs a new kitchen. So you can go in and say, okay, we're going to need $15,000. So we're going to purchase the house for $400,000. We need $15,000 to do a new kitchen. As long as the house will appraise at that value when it's done, the kitchen renovation, then yes. So it more so on the property itself than the actual first-time home buyer. So if your full pre-approval amount will cover 400 plus the 15, then yes, it works. So it more so comes to the appraisal value of the property you're looking at doing the cost of improvements with. And when we look at that, and if that's something you're interested in, we kind of have that mindset when we're shopping. We'll run things by Sam as we're in the process to make sure it does qualify, what it will qualify for, etc. So we just kind of work through that on a case-by-case basis as well.
Thanks for that, Nikki.
No problem. That one's come up quite a few times, so we do that one. Okay. Any other questions that we can go over? And even if they come up after the fact, you're welcome to email us, text us, call us, whatever is easiest.
I was about to start humming too.
All right, so that's awesome. Thanks so much for coming. We really appreciate the fact that you've taken the chance to come and learn some information. I know some of the numbers can be boring, some of them can be overwhelming, but we're here to answer all those questions and make sure that everything goes smooth and you guys can enjoy the rest of your night. We're really thankful that you came.
Yeah, thanks a lot, guys. I'll get a follow-up email from us with the recording of this in case there's anything you missed. Again, it's never a bad time to start the conversation of, chatting to Nikki about what your real estate options are, or myself for the mortgage side of it. So again, thank you to Nikki for taking some of your time for this presentation. It's always a pleasure. Yeah, and I guess we'll just call it a night.
Thanks,
All
guys.
right, everybody stay safe and have a